Now, let's move on to South Africa. The country's mining sector, at least players in that sector, did come together to sign a 10-point declaration on Monday that essentially compels them to undertake to look at ways of minimizing job losses in the country, especially as the gold and coal mining sectors prepare for arbitration in the 8-week-long wage talks so far. The Mineral Resources Minister had called industry players to their offices in Pretoria to sign the declaration earlier on Monday. The stakeholders met at the beginning of the month to try and find solutions that will help avert a job crisis in the sector. Employers were represented by the Chamber of Mines and the Southern African Mining Development Association. Union leaders from the National Union of Mineworkers, Solidarity, UASA are also there. The Association of Mining and Construction Workers, AMCU, however, was also on hand. But, and this is important, they did not sign this declaration.
I'm sure our presence here this morning should speak volumes, to the extent that you will not be seeing immediately our signature on a document. That should not send a message out to the world and to all South Africans that we are not in support of the process.
I'm very much hopeful that going forward we should be able to ameliorate and save as many jobs as possible and to intervene where in other ways, as mentioned in the declaration, with regard to aftercare of those who might be out of the situation. But our first part is to try to save the jobs. That's the focus of this exercise.
Let's head over to Johannesburg and get more data on this story from CCTV's Angelo Coppola, who's been covering, of course, South Africa's extractives industry in detail for quite a while. Angelo, let's talk about this idea of pitching platinum as a reserve asset. Platinum is essentially an industrial metal. It doesn't have the same function as a store value as gold. So what's the value proposition here?
Well, Ramatlodi remarked that he'd like to see gold replaced or at least supplemented with platinum as that reserve for this South African currency. And in fact, the Chamber of Mines backed that comment or that sentiment, saying that the metal is scarce and could be included in the South African Strategic Reserve. Possibly also, he suggested, introduced into BRICS national banks. It's a long-term discussion. It's not something that's going to happen overnight. But Ramatlodi wants to also move away from platinum being an export business model, because currently there is no value generated in country. There have been lots of talks for at least a year now since the last strike in the platinum sector that Rustenburg would become this center of downstream value chain creation. It's not happened. And we know about that long-term talk around beneficiation, and again, nothing has happened. In terms of fuel cell technology, there seems to be a bit of an opportunity there locally, because that's starting to take off and it's starting to gain some traction there. But generally, the value that they're looking to create locally is hoping to create a value chain and possibly create and maybe absorb some of the potential job losses that the industry is currently facing, Raman.
Indeed. There's also been talk about a fund to retrain any miners who might be retrenched. And of course, to keep our viewers to put this into perspective for viewers, you're looking at about 12,000, 19,000 jobs at risk here. But how big is this fund going to be? How is it going to be funded? What sort of skills will it focus on in terms of retraining any mine workers who might be retrenched?
Well, Raman, basically the funding thoughts, because there are thoughts at the moment, are centered on taking a portion from the existing imported capital goods levy or tax that is pushed on miners when they're importing big capital value items that they use to extract the value from the ground, or the ore from the ground. And they're also planning to get business to contribute to that fund. But as Ramatlodi said earlier, they still have to engage with the Department of Finance to see if there's any interest. The challenge here at the moment is that National Treasury is under pressure. It currently hasn't met its revenue collection targets because of the economic slowdown in the country. So one can assume that Treasury aren't going to be very receptive to this kind of diversion of funds that they're currently gaining. And in terms of the size and the type of training, that also hasn't been discussed, because this fund is seen as a long-term intervention. There is talk also of using the Unemployment Insurance Fund to fill the gap, But again, that's all talk at the moment, Raman.
Indeed. Over the last 5 years, mining stocks at the JSE have essentially delivered a negative return to investors compared to the broader market. Now, when we talk about selling off mines that are unproductive or really can't just be sustainable or profitable for that matter, who is going to buy these stocks when investors have been shunning mining stocks in general for the last 5 years?
Well, it's probably been going on longer than that, but it's covered in intervention number 4, and very vaguely it says that distressed assets, and those assets that are distressed could be any number of mine shafts that are unproductive or that have been closed. And as you know, any business, and that includes a mine and its shafts, would prefer to sell the shaft or the mine or their business as a going concern, so that they can at least get some return on their investment, because that's what their shareholders are looking for. The issue is that there's no interest, because the mines in the platinum sector, or the shafts that have been put on sale by the likes of Anglo Plats, haven't attracted any kind of firm offers that we're aware of at the moment. There isn't much interest, and this is driven mostly by the depressed resources prices in the market at the moment, and it's made worse by South Africa's relatively high labour costs and the inability to mine mechanically at depth. Analysts are also telling us that the Chinese investors that were looking at the mining sector have also shifted their focus from primary mining to other sectors like infrastructure and mineral resource processing. Rama?
Indeed, we'll leave it there for the time being. Thank you for your insight. That's Angela Coppola live in Johannesburg.